Welcome to the Deep Dive. Today, we're diving into a fascinating anomaly in the U.S. housing market.
Yeah, it's quite something.
While headlines scream about cooling prices and rising inventories in many parts of the country, there's one region that seems to be operating in its own universe, with prices still surging and bidding wars as hot as ever.
Definitely bucking the trend.
It's a truly unexpected turn, and if you're like us, you're wondering, why? We're going to pull back the curtain and show you exactly what's driving this unique situation.
Absolutely. Our mission for this deep dive is to guide you through the intricate details of this particular housing market's surprising resilience.
Okay.
We'll peel back the layers, examining the current data,
Yeah.
exploring the unique underlying reasons for its performance, and perhaps most importantly, tracing its historical patterns.
Right, the history seems key here.
It really is. It helps us gain a clearer picture of what the future might hold. We'll reveal the distinct combination of factors at play, from population shifts to market structures that create a very different dynamic from what you might expect.
Okay, let's delve into this. The spotlight today is firmly on the upstate New York housing market.
That's right.
Now, this isn't just one city. We're talking about a broad stretch of communities, from the Hudson Valley towns like Poughkeepsie and Hudson, all the way up through Albany, and then west across Syracuse, Rochester, and Buffalo.
A pretty wide geographic area.
Exactly. And the immediate shocker for many, of course, is that prices here are not just stable, they're booming.
Still booming, yeah.
And those intense bidding wars we thought were a thing of the past, very much still in play across much of this region.
And the numbers really underscore that point. Over the past year, Rochester saw prices climb by 6.5%.
Okay, 6.5.
And Syracuse, an impressive 7.7%.
Wow.
To put that into perspective for you, Syracuse was the second highest growth market in America over the last 12 months.
Number 2 in the country.
Number 2. Rochester landed at number 5, Utica at number 12, and Binghamton at number 20.
So several cities in the top 20.
Exactly. What's truly remarkable here is the contrast. While we're seeing home values decline, sometimes significantly, in places like Florida, Texas, and Arizona.
Right, the Sunbelt markets.
Yeah, those markets are cooling. But these upstate New York markets are still appreciating at a surprisingly healthy clip.
That sustained appreciation is fascinating, especially against the backdrop of a cooling national market. Are there any counter-arguments or overlooked factors that might challenge this picture of resilience? Or is the data truly unequivocal on these drivers? What specifically is behind this?
Well, it's a multifaceted situation, but the data is pretty consistent across the region. A significant driver is the trend of people who left upstate New York over the last 5 to 10 years now moving back.
Ah, return migration.
Exactly. Our analysis suggests this isn't just a casual return, it's a strategic move for many. With the rise of remote work, former residents are able to leverage the comparatively lower cost of living here.
While keeping potentially higher salaries.
Precisely. Often maintaining their higher-paying distant jobs. This remote work flexibility is fundamentally reshuffling demographics, especially favoring more affordable regions with established communities.
Makes sense.
And crucially, coupled with this influx, there's a chronic lack of new home construction in the region.
Right. That's a common theme.
It is, but it's particularly acute here. It's creating a perpetual shortage of homes available on the market.
One aspect that really stands out when looking at these numbers is the sheer lack of available homes. It feels like the core of this boom is an inventory crisis.
It really is central.
What does the data tell us about the magnitude of this shortage? I mean, how low are we really talking?
It's a massive drop. Consider the 5-county Albany metro area. Right now, there are only 942 homes on the market.
Just over 900.
Yeah. Before the pandemic, that number hovered around 300 to 400.
Wow, that's a huge difference.
It is. Even compared to long-term norms, which averaged around 2,000 homes, that's a 46% decrease. And critically, there's been absolutely no recovery in inventory over the last 3 years.
No bounce back at all.
None to speak of. In Poughkeepsie and Newburgh, inventory is down about 60% from pre-pandemic levels.
60%.
Out west, in Buffalo, it's down by about half from where it was even during the pandemic.
Okay.
This extreme lack of inventory is directly fueling the bidding wars we continue to see. Houses are often listed for just 2 or 3 days.
That fast?
Oh yeah, open houses are packed, and within 5 days, the property is typically pending sale.
It sounds like homes are not just moving fast, they're disappearing. What are the typical days on market figures looking like in this region? Because those numbers often tell the real story of buyer demand.
Right, the DOM figures. They unequivocally confirm how quickly these homes are selling. In Rochester, the typical house is on the market for only 27 days,
Under a month.
under a month. Now, that's slightly up from 15 days last year at the absolute peak of the frenzy.
Okay.
But it's still less than a month. And remarkably, it's even lower than the pre-pandemic average of 30 to 35 days.
So faster than normal, even pre-pandemic.
Exactly. Even in the northern Hudson Valley, near Hudson, DOM is 78 days now compared to 110 days before the pandemic.
Still quicker.
Significant drop there, too.
And if you look at smaller cities near the Finger Lakes, like Seneca Falls,
Mm.
popular vacation spot, wineries,
Sure.
DOM is down from 68 to a mere 28 days.
28 days. Wow.
Bidding wars and rising prices are still the norm, even there. What's truly fascinating to note is that we're seeing similar low inventory and quick sales in parts of Massachusetts and eastern Pennsylvania.
Oh, interesting. Similar dynamic.
Very similar dynamics. These
Yeah.
are areas with similar government-driven or healthcare-driven economies, but notably no booming job growth.
So it's not just about jobs then?
It doesn't seem to be only about jobs. This shared dynamic across upstate NY, MA, and PA highlights a critical insight for you as a listener. Markets anchored by stable, non-growth dependent sectors like government and healthcare,
Right.
coupled with severe supply constraints, seem to create a distinct stability over speculation housing profile. They're uniquely resilient even without explosive job creation. Stability over speculation. I like that framing. So, connecting all these dots, what does this sustained boom mean for the future of prices in upstate New York? Because I hear whispers about long-term sustainability and whether these increases can continue beyond the next year.
It's a very valid question, and it brings us to a fascinating aspect of upstate New York's housing market. It's incredibly consistent, historical, cyclical trend.
The cycles, right?
Yes, prices tend to boom for 4 or 5 years,
Mm.
and then very often for a decade or so, prices will flatline, just sort of plateau.
A whole decade.
Often, yes.
Yeah.
If we look at Syracuse home prices all the way back to 1977, we have 45 years of robust data. You can clearly see 3 distinct boom periods.
Okay.
There was one from about 1981 to 1987, followed by a flat line from 1989 to 1999.
10 years flat.
Pretty much. Then another boom from around 2001 to 2007, followed by another decade of flat
Or
prices.
another one.
And starting around 2019, 2020, we've entered another boom that's still continuing,
Albany.
which is a very similar trend.
Huh. Consistent pattern.
Very consistent. If history were to repeat itself, which it often does in these consistent markets, at some point, prices in Syracuse and other upstate cities are likely to flatline again and stop growing rapidly.
You mentioned this incredible historical stability, the no crash phenomenon. Is there a scenario, perhaps an unforeseen economic shock or a drastic policy change that could potentially break that historical pattern? What would it take for upstate NY to finally see a significant downturn?
That's the million-dollar question, isn't it? And it's a crucial point of differentiation for this market. The upstate New York housing market has genuinely never had a crash in the last 50 years.
Never. Like not even in '08.
It barely registered in '08 compared to other places. It will go through these booms, but then prices simply remain stable for extended periods. If we connect this to the bigger picture, this is a significant difference from places like Florida or Arizona,
Yeah.
where the price of your house can indeed experience a substantial crash. In upstate New York, that just doesn't happen. The market appears to correct through extended periods of zero appreciation, not through steep declines.
Fascinating. Okay, what kind of homes are typically available in this market? I'm picturing something quite different from, say, the newer constructions in other booming areas.
You're absolutely right to imagine something different. A lot of the houses in upstate New York are older, often built 60, 70, or even over 100 years ago.
Wow, really old stock.
Yeah. This means you'll find unique circumstances, like many homes having only one bathroom.
Ah, the one bathroom issue.
Exactly. And often not the largest bathroom because they were built during a different era. When I hear about homes built 100 years ago with just one bathroom, it really paints a picture of the unique character of these markets.
Totally.
It's almost like you're buying a piece of history, quirks and all, which you wouldn't expect in, say, a sprawling new development in Florida. For example, you might see a 3-bedroom, 1-bath house near Albany listed for $349,000.
Oh.
Now, regarding overvaluation, one area that's really seen prices skyrocket is towards Saratoga, home of the famous racetrack.
Saratoga Springs.
Right. Listings near downtown Saratoga are often in the millions of dollars. Condos there are listed for $789,000
For a condo?
for a condo, which is notable considering one apparently sold for just $55,000 back in 2021.
That's a huge jump.
It's trying to price itself like Westchester, maybe, but it's not quite there yet. Saratoga Springs home values are estimated at 15.67% overvalued compared to their long-term norms.
Okay, so some overvaluation there.
And Saratoga County as a whole is 16.7% overvalued. Other areas are also seeing overvaluation creep in, like Monroe County and Rochester, which is reportedly 28% overvalued.
28%, that sounds pretty high. So if some areas are significantly overvalued, why aren't we predicting a crash like in other overvalued markets across the country? That seems like a glaring contradiction.
Yeah, it does seem contradictory on the surface, but it's a critical distinction. The historical pattern of no crashes is definitely a key factor, making upstate New York an outlier.
The historical precedent matters a lot.
It does. But beyond that, there simply isn't enough inventory on the market, virtually no supply, and almost no new home building to alleviate the pressure.
It still comes back to inventory.
Fundamentally. There's also very little investor activity, which often exacerbates market volatility elsewhere. Speculators aren't really driving things here in the same way.
Less flippers, maybe.
Much less, yeah. So the only way we would see a significant increase in supply in markets like Albany, Rochester, Syracuse, or Buffalo is if existing owners were forced to sell through a surge in foreclosures and mortgage defaults.
Which would require major economic distress.
Exactly. But that's highly unlikely to happen to a significant extent because these upstate New York economies are remarkably stable. They benefit from a substantial base of government jobs.
State jobs, university jobs.
Right. And the few big companies located there have been established for a long time, providing a solid economic foundation. There's even potential for tailwinds from onshoring.
Bringing manufacturing back.
Yeah, that's the trend of bringing manufacturing jobs back to the U.S. from overseas. More of those jobs potentially returning to the region could further shore up employment.
Okay, so multiple layers of stability built in.
Pretty much.
We've taken a comprehensive deep dive into the upstate New York housing market. We've explored its current surprising boom, driven by that persistent low inventory and the strategic return of residents. We've also uncovered its truly unique historical cycle of booms, followed by long periods of stability, critically, with no crashes.
A key takeaway.
And we've looked at the specific characteristics of its older housing stock, even in areas showing signs of significant overvaluation, understanding why a crash isn't on the horizon.
Overall, the outlook for the next year remains quite bullish for upstate New York. However, it's incredibly important for you as a home buyer or investor to do thorough research.
Absolutely.
You really need to analyze the data for your specific city and zip code in New York, as significant differences in valuation and local dynamics can and do exist.
Good advice. You can't paint the whole region with one brush.
Definitely not.
Consider this. Given the consistent long-term historical trend of prices flatlining for a decade after a boom, if you're hoping to buy into upstate New York's housing market primarily for significant long-term appreciation over the next decade, well, don't necessarily bank on seeing much more than the strong growth we're currently witnessing.
Right, that flat period is likely coming at some point.
At some point, this distinctive market is likely to transition to a period of stability, not a crash. So the final thought is, what does stability truly mean for your specific investment goals in such a unique and historically reliable market?